What's up guys, Steven Dux here. So today I have a really good news for you guys, and we'll be hosting a conference in March 28th, 29th, and 30th. In this conference, we'll be randomly select 15 people and we'll take them to the NASDAQ trading floor and ring the bell and just generally enjoying the trading floor environment. The conference will be 3 days. The first day will be generally talking about beginner techniques, and we'll be also covering the most updated strategy in 2020 and what techniques have changed going through and try to adapt in the market in this year, because I've certainly noticed something is changing beginning November last year. So we'll be giving most updated strategy to correlate with your method to go into the 2020 market and help you to become consistent profitable. So the second day, we'll be talking about general statistics. And a lot of people are hearing about that I'm very good with statistics sheets. I've tracked tons of data from 2016 to 2019 and have a general understanding of how pattern works and what's the frequency of the pattern. We'll be giving new updates for that as well. I will give you step by step to use statistics to help you generate more profits in the future. So this is more for people who are intermediate level trader, and if you're trading for a few years, it will benefit you a lot. So the third day, we'll be doing a live trade like the last conference. Last conference, we made 27,000 in front of 200 audience. Once it's bounced, once they crack that support again, I sized it in that bounce right there. If you want to see the live trade, we'll put a partial recording in this video. You can see the last conference live trade. So lastly, we'll be launching a platform which is very suitable for beginners. The platform itself includes my own pattern and my own strategies. Let's say oversitting gap down. I have programmed this specific strategy into this platform, and when an oversitting gap down potentially pops up into your scanner, it will tell you this pattern will be a potential oversitting gap down. And will help you generally filter out all those tickers and help you find the pattern much easier compared to before that you have to manually go through every single ticker in your top percent gainer, and you waste a lot of time. And also sometimes because you are trying to find a pattern, you will miss tons of pattern out there at the same time. So this one could really benefit you as a beginner to start learning the market, and also we build this feature as you can use your own data that you track to invent your own pattern and find your own edge in the market. And I think it will be really good for you if you're just started trading or you've been trading for a few years. I think it will benefit you in the long run. So that will be all for the conference. Let's get into today's topic. So today I'm going to give you a little bit of content about this conference and what we'll be including. And at the beginning, I will be introducing what's a short sell and what is a buy and hold, and how can be profitable by understanding the average reward and the risk behind it. Let's talk about long and short, and let's cut them into 3 different categories. The first one will be the winning percentage. Now, shorting by statistics generally have higher winning percentage compared to you trying to go long. Now, compared to the reward, same thing, because if you're shorting a position, the maximum reward will be 100%. Now, average reward will be anywhere between 15 to 25%. Using short strategy across all my trades, the first category that I put them in will be 10 to 15%. That will include some of the tickers that doesn't really fit the criteria but somehow fit the criteria. It's not 100% pattern, but it's worth it for a trade. So generally in this pattern, it happens pretty often, about 100 times a year. The next one, the reward will be anywhere between 20 to 25%. That's where the money maker is. And when you are looking for a specific pattern, if it fits the 100% criteria, you'll generally get that reward pretty easily. Lastly, the biggest reward that I have encountered is you got caught into your offering and you're shorting into your offering. And in that case, you can generally make about 50% to 75% of your original investment. So category 3, we'll be talking about risk. Now, normal people understanding will be shorting has infinite risk, but pretty much all the time, you will have your own risk built into your shorting strategy. And generally, shorting risk percentage will be around 7% to 10% for me. If I'm shorting this stock, I'll be risking anywhere between 7% to 12%, depends on the pattern's winning percentage. But if you're a trader that major in short, you'll know that when you're shorting to a consolidation, there will be sometimes have a burst candles that instant cause a huge short squeeze that you don't really have the time to get out. Now, after you realize it's a short squeeze and you blow off your risk, you'll be automatically down about 30% to 20%. That's one of the biggest risks for short selling, and get caught into a short squeeze in a really short amount of time. So I get a lot of questions that people ask me, well, Steven, I can't short, how about I can go long? Now, long strategies that generally work in the penny stock or small cap market, but the winning percentage by statistics massively drops. Now, let's give you an example. So let's say shorting, you're reacting to a stock. And for going long, you're trying to predict the stock. So those two are completely different concepts. We are trying to track statistics by itself. So I tracked about 10,000 samples. Long strategy generally have about 60% to 65% winning percentage, and the reward will massively overwhelm the shorting reward. It's because when you bought a stock, let's say at $2, you can sell at 5, you can sell at 10 if it goes there, and the reward will be sometimes 1,000%, 200%. But when you're shorting, the maximum reward is only 100%. So let's talk about the risk of going long. And I think the most dangerous part will be you get caught into an offering and stock just straight drops about 75% from its own gain. Since we all know small caps or micro caps, they all have really bad fundamentals. All they want to do is to do potential dilutions to gain money from the investors, and then we just do another reverse split again and again. And when you compare it to short and long, for me personally, I would rather stick to like a high winning percentage and lower reward. And if you really want to go long, you can long into like a very neutralized area with a really tight risk. If it gets volume and gets some type of news, you can potentially gain 60%, not 100%. That's no surprise there. So make sure you understand your risk and try to invent a way to control your risk, because I see a lot of people discussing about day trading, and day trading has the most potential reward in this industry. But the amount of reward also comes with the risk. So if you know how to control your risk, this game is all about how to manage your risk and how to keep your risk as tight as possible to potentially get the massive amount of reward. So that is the difference between going long and short. And we'll be giving more tips and content in the March conference. So I hope you guys can join. If you want to get the tickets, make sure to click the link in the description. And I will see you guys next video.